Hello everyone again. Hope everyone is doing fine. Okay, so today we are going to discuss double entry system. Double my handwriting. I'm so sorry. Double entry system of accounting. Okay. So what double entry system tells us? Double entry system tells us that every transaction has dual effect. EFACT. Okay. So what does that mean? So let's say a business, it purchases an asset. A very basic example. So let's say a asset was for let's say what can it be, $100, and for that it paid cash of 100. All right. So what the double entry would be for this one? For example, what I did was debit asset 100 and created cash 100. Now, what is this and what exactly are this? So it's fine. When we are in the field of learning accounting, and when we come across the double entry system, it's a horror. It's horror for every student. It was horror for me, and it was very complicated. Debit what, debit asset, create cash, what is going to be, why is it happening, how to remember this? And that's totally fine. But the good thing is, I am going to give you a nice and easy tip, which makes it very easier to understand and which worked for me at least. So what you need to remember, why the color of the pen has changed. I have no idea. I want black again, please. Is it black? Okay, it's black again. So the easiest formula to remember for this is dead click. Okay, so the dead click, it teaches us that. Okay, I'm going to go to the next page and I am going to make it clear. It's getting messy here. All right, wait a second. How am I going to go to the next page? All right, perfect. So I'm going to go like dead click. So this tells us that any increase in expense, asset, and drawings, you are going to debit it. Okay? And any opposite of this, for example, reduction in expense, reduction in asset, drawings, is going to be credit. So basically, any increase in any of these three would be, you would be debiting, and very logically, if there's any decrease in these three, it's going to be credit. On the other hand, click tells us that you are going to credit any increase in liabilities, income, capital. Okay, and same like the other one, decrease in these three would be credit. So let's say owner of a business, he plans to invest, let's say $1,000. All right. So how it's going to be? So for example, from a business point of view, the business is going to record cash, 1,000 it received from the owner. It would be dollars, and it received, and the capital basically is also 1000. So now, so what is going to be? What is going to be the debit side and what is going to go to the credit side? So yes, since the cash is increasing, so we learned here the cash, any increase in asset is debit, right? So cash is our asset. So we are going to debit cash 1000 and credit. We learned here that any increase in capital is credit. We are going to credit. So capital credit with 1000. Nice and simple, and there we have it. The thing is, guys, you really need to learn this well. If you think you are going to learn it and then just move away to the next chapter, next topic, and it's going to be fine, trust me, it's going to, if you are a financial accountant, it's going to haunt you for the rest of your life. For example, in our finance team, we still discuss what's going to be, when there are complex transactions, when we want to, uh, we are digging into transactions, we still, discuss that what's going to be debit, what's going to be credit. And it's not like now we have ERP systems, accounting software, so it's doing for us all the job, and it's all automated. It's not like that. You still need to figure out that if the treatment is being done, is the treatment done by the software ERP system is correct or not? Is it doing the correct debit? Is it doing the correct credit? So you have to look into all of that. So you really need to, you know, make it clear to yourself. So hope it was a short video. Hope you guys enjoyed it, watched it, and I hope I made it clear. And please feel free to tell me if there's any improvement in my videos I can make to make things much easier to understand. So thanks for watching my video. Yes.